Good evening, traders. Adam here from Bold Logic doing the market analysis with you. Another rough day in the markets. Pretty much gapped down to begin with, stayed down most of the day. We were down like 1.7% at one point, came up and finished at 1.44% down in the S&P. We did put in a bottom early this morning and then kind of slowly grinded our way higher, even though we never really made it there. At one point, we were only down about 1%, but unfortunately, we did have a bit of a sell-off into the close. Probably a little bit due to Apple sell-off, but we'll get into that in a minute. Just looking here, we are seeing a lot of weakness come in. We finally closed below that 1420 level, that main support line right here that has gone back multiple years as a great support and resistance line. It was our main line in the sand. It is now broken and we have closed below it. We might see just a flush below it and then a pop back up tomorrow. So we could actually see a nice little bounce come in tomorrow just because we have overshot the support line and then we could bounce, but with the damage being done and the way we actually close below it, I would expect more weakness to come into the market at least later on this week. Maybe not right yet, just because we are starting to get a little oversold. You know, we had two big down days so far. We need a little bit of a breather here. We need a little bit of a balance. We need a little bit of a sideways movement. Otherwise, we are just going to get into a very oversold territory. Now, one thing about being oversold and overbought is if you're in a bear market, you can stay oversold for a long period of time. Now, I'm not saying we're in a bear market. I'm just telling you that just because we're oversold, don't just expect to bounce immediately. And just like in a bull market, you can expect to be overbought for a long period of time, and a lot longer than you would expect. It pretty much just doesn't even matter anymore if you're oversold or overbought if you're in a bear or bull market. But I don't think we're in a bear market here. We haven't closed below the 200-day moving average. It's still a rising 200-day moving average down here in the 1372, 1379 level. So short term, we are starting to hurt a little bit. Long term, we are still bullish here on the market. Our next level of resistance is that 1397 level, just a small level of support, excuse me. And then we have that 1390 level here, which is a nice strong support level. So I have to see if that holds if we do get down to those levels. NASDAQ, nice touch on the 200-day moving average to finish with a nice little doji candle. This is a lot more oversold than the S&P. We are really setting up for a bounce here. We'll have to see if that bounce can actually, come into anything, or if it's just going to be a nice dead cat bounce where there were a nice little bear flag back into this resistance zone. Russell 2000, same thing as the NASDAQ, broke below this trend line, did start to peek its way just above it a little bit, only down 0.53%. Nice little bounce out of the Russell. Did bounce off that 200-day moving average. Again, starting to get pretty oversold here, so we're going to see if we can't generate a bounce going into tomorrow. Now, a lot of people are expecting a bounce going into tomorrow, which makes me doubt it even more. But we do need to move sideways at least, or get a nice little bit of a bounce just to work all these oversold conditions and start to reset up charts. Big down days like this make it very hard to find quality charts out there. They're a lot more scarce, so we just have to reset the charts. VIX is everything you would expect to see, up to date 13%, which is pretty much textbook move here in the VIX. One thing we like to point out is at one point during the day, the VIX cash, which is the green line, actually moved above the futures, which means it did go into backwardation, which is a very bearish sign when the VIX moves into backwardation. Right now it's in contango. It just means the VIX cash moved over the futures, which means people are fearing the near term, they're fearing the right now over the future, which does not happen very often. And when it does, it gets very bearish. Luckily, due to the bounce in the market, we did pull back on the VIX cash, so we are still in contango. As you can see, the green line is below the VIX futures. Make sure you check out VIX Central, great website to have just to follow the VIX and the VIX future term structure. Just looking through a couple of sectors, nothing is really shining here. Energy had a bad time. Utilities have come down in that 50-day moving average. They still could fall further, no problem. Materials are looking a little bit better. A lot of sell volume came in today, but they did find support on that 200-day moving average. Unfortunately, they got a lot of resistance up ahead. Technology, not much better, retesting that 200-day moving average already on a lot of sell volume. Even though it is very oversold, it is weakening that 200-day moving average, so we could slip below it. Financials did fall below that 20-day moving average. They are still holding the higher low, but we do need to balance. If we move below today's lows, then they will break this uptrend that we have been seeing in the financials. And biotechs have continued to get destroyed here. A lot of sell volume still coming in. Even though it is getting oversold, it might start to put in a little bit of a bounce here, but I wouldn't expect much to come out of biotechs. All right, everyone. Again, we're getting very defensive here just because there is weakness creeping in. We're starting to see some big moves to the downside before, as we've been seeing in our big moves upside. We had all these big moves to the upside, and then we'd grind lower. Big move to the upside, grind lower. Big move to the upside, grind lower. We're starting to see the opposite now. We're starting to see the big move to the downside, and then a grind higher. Big move to the downside, and then a grind higher. So the landscape is changing here, and that's causing us to get defensive. Looking at more shorts, looking to swing more shorts. When we're finding longs, make sure they're running, make sure they have the strength versus the market. Look for things coming up on PR or earnings that are really starting to put in the gains. If the market cannot produce good earnings out of companies, just tonight, Facebook and Netflix both missed their earnings. I think Netflix was down 15% at one point. So again, not looking good. We have Amazon and Apple coming up on Thursday. Those are going to be the next big market movers. But if we cannot produce good earnings, this market is going to continue to hurt and hurt. So keep that in mind as you see these earning reports come out. All right, everyone. Good luck tomorrow. We're going to take it a little bit slow just to see if there's a digestion day coming into the market where it doesn't really do any movement. So we're just going to have to play it by ear and see what the market is going to give us. Good luck.